Morning, everybody. Welcome to the Flow Show, Tuesday, the 16th of September. And I would say quietish start in terms of data and stuff, but we've still got some price moves going on around markets. So plenty to talk about. Morning, Mr. K.
Morning, Ryan. Morning, everybody. Happy Shag Day for the sterling. It's 33 years ago that Mr. Lamont, who was chancellor then, let the sterling go in 1992. So maybe we have a little remake of this today.
Yeah, well, let's hope it goes. I'm certainly hoping it goes up at least and continues to go up because of my positioning. But that's book talking 101. Anyway, what will happen in the past is no indication of what may happen in the future, as they're from the telling us in the investing world. Right, let's start with what we do know. Japan's Hayashi says he wants to incorporate wage growth policy in his election pledge. We've also had more hats officially going into the ring. Kobayashi says he will run in the leadership race and will plan an income tax overhaul if elected. So pretty much all the main runners are now in the race, and they'll be doing nothing but blathering about what they're going to do if they get elected. October the 4th is the date for that. That might come into a bit more focus in terms of yen trading once we get over all this Fed and stuff and everything else, and the Bank of Japan. Then focus will probably switch to that. The RBA say they're pretty close to inflation and jobs targets, according to Deputy Assistant Governor Hunter. So they're coming close to their targets. Whether they decide to do anything with policy on that remains to be seen. We did have some data out of the UK today. The much anticipated jobs data, for what it's worth in its accuracy. Overall, not much to write home about anywhere. Claimant count was up a bit more than expected, 17.4, though the 3-month rolling employment change was a bit higher. The unemployment rate came in unchanged at 4.7 as expected. Wages, ex-bonus dipped to 4.8 as expected. Including bonus rose to 4.7 as expected. So pretty much all on the money. The wider take from that is that, again, it's probably a case of things could have been much worse than, in fact, things were much better. So a little bit of light relief for the Chancellor and the Prime Minister as well. Speaking of the Prime Minister, he's under the cosh a bit. He's lost his Washington ambassador. He's lost his deputy leader, and he's lost an advisor or an operations manager for inappropriate emails. He's really under the cosh at the moment, is old Starmer. But it looks like Mr. Trump is going to throw him a bone, saying US official yesterday saying that the US and UK are to announce more than 10 billion in deals during Trump's visit. He definitely needs a win. Now, there is growing pressure on the Prime Minister. At the moment, it's probably low level, but it's growing. And if any more mishaps happen, he's going to be under huge pressure to possibly resign, which is going to throw the cat amongst the pigeons a year into his term. There's going to be a big debate over the Mandelson stuff in Parliament, and that may highlight what he knew and what he didn't know about all that stuff before he appointed Mandelson. He's been doing the blame game and blaming advisors and other people for not telling him exactly what was going on. Well, unfortunately, the buck stops with him like it does with every other Prime Minister. So just something to keep an eye on for the quid. We could get some pressure on the leader. And if he resigns, I don't think the market's going to look at that too fondly. But anyway, stuff for the future. German zoo, that came out a little bit mixed. The current conditions are worse, down 76.4, so things are much crappier than expected right now. However, expectations picked up to 37.3 were expected to fall back. So a little bit more positivity for the future. The Zoo Institute said that financial market experts are cautiously optimistic. They say the Zoo indicator has stabilised, but the economic situation has worsened. There's still considerable risks as uncertainty about US tariff policy and Germany's autumn of reforms continues. Kay, going through that data, nothing from the job stuff. Germany still not producing the goods in terms of what we want to see, and caution ahead of their sort of a budget or fiscal announcements later.
Yeah, I think it's about the third or fourth consecutive month that we see the hopium indicator higher, and then current conditions they've been revised to the downside again. Yeah, what can we say about Germany? They're still somewhere hovering around the bottom, but there is a bit of hopium, and but we've been talking about that. How long will it last before they really get off the ground? So that's still the main question. Not that it hurt the euro at all. We haven't really seen any weakness in the euro this morning. And especially not on the back of it. There hasn't been anything said. Well, I mean, there hasn't been anything traded on the back of it. Yeah, the dollar is a bit weaker, but if you look at the euro crosses, they are pretty big still.
Yeah, very much. What about the Japan stuff? Any
well, those that we expected to run are running. It had a little bit of an effect when Kato said that he would accept the to be the what is it, the PR man for Koizumi, but then look at the end crosses, they don't really care too much about it. Probably not going to change anything right now. They're all calling for those cuts in taxes, etc. They all seem to be running kind of the give and take some exceptions, but that will filter through later, the real differences, because it's going to be on relationships and geopolitics, etc. That will probably filter through a bit later in the month. But yeah, for the rest, as I said, still unchanged. For what yen is concerned, the extremes are probably Takahashi and Motegi, and then everybody in between is going to take bits and pieces of those programs and then try to implement them once they are elected. I still think if you look at the popularity of each and every one of them, I would still call a 75-80% chance that we are going into a runoff between Takahashi and Koizumi.
Yeah, I think so too. So yeah, it's all to play for, as we like to say in football terms. But anyway, let's move on from those clowns over to the ECB. We've had ECB's Schnabel saying rates are in a good place. Monetary policy should continue to keep a steady hand, and that moderate deviations from the inflation target should be tolerated. They're all building in that optionality for seeing inflation wobble around a bit, as long as it doesn't trend anywhere. ECB's Kocher says risks are now more balanced. ECB's rates are fine where they currently are, should keep ECB powder dry. Kazakh's a reduction in ECB rates is already very significant. There's no reason to cut rates more at this moment. ECB's Kikluna says no cut already in a box. There's no cut already in a box and waiting to be unpacked, i.e. fancy terms for saying he's on hold as well. Bank of France, they've joined their stats agency in getting on the old wacky backy. They now see growth rising to 0.7 from 0.6 from their prior forecast in June for this year. However, they're back to normal for 2026. They've taken growth down to 0.9 from 1%. also taken 2027 down a pip to 1.1% as well. ECB's Villeroy says French growth is not strong enough but remains positive. Wonder how long that'll last. Says we seriously have to tackle the debt problem, and there's no reason for France to become Europe's laggard. I think it's a bit late for that, sunshine. A bit of data yesterday, not an awful lot. We did have I even got it up? Yes, it should be there. Where is it? Empire State Manufacturing coming in down 8.7, was expected to pull back to still a positive 4.3, but it came in negative. Employment fell into the negative, minus 1.2 from 4.4 prior. Prices paid eased as well, 46.1 from 54.1. Prices received also down smalls to 21.6 from 22.9. New orders doing a lot of damage, down 19.6. So not a good start for manufacturing in the US from one of the regionals, though this Empire has been a bit of a wobbler for the last couple of years or so. Bully Bullard in the hat for Fed governorship apparently spoke to Besant last week about the Fed chair position. Says he's very interested in becoming Fed chair under the right conditions. Says the Fed must defend the dollar, keep inflation low, and protect its independence. All sounds like comments that isn't going to get him a job, Kay.
Yeah, exactly. Exactly. I mean, it could potentially pass the Besant, how should I say, the Besant judgment, but it's not going to pass the Orange Hurricanes lines, I think.
No, very much. And yeah, one person who might be, though, is old Miran. He got confirmed in, and now he's going to be set for Wednesday, or today even, because that's when the meeting starts. The appeals court also has ruled that Governor Cook can continue as well. So that's off the table for this meeting at least. And after all that hearing, can still go to another appeal or Supreme Court or wherever the Yanks want to take it next, or Trump wants to take it next. But for now, she's in the seat. And a Michigan official after that appeals court ruling said there's no evidence of primary resident violation by Fed Governor Cook. The city tax authority saw no breach of primary residence rules, and also says that it's a bit of a high bar over whether any further action would pass for being able to be investigated and prosecuted. So sounds like she's got a bit of a pass on that one. Canadian PM Carney seems to be getting tough. Apparently he's told Anglo American that it has to move its headquarters to Canada, or he wouldn't approve a tech mining deal that they've got coming up. So playing one of Trump's cards in making sure you're in Canada if you want to get stuff done. The BIS, the Bank of International Settlements, threw out a pearl of wisdom to justify their existence again. They said elevated valuations of risky assets leave them vulnerable. I mean, it's as much a no shit Sherlock comment as you could ever get. Mr. Trump is going to be looking to tinker with how companies report. He says, subject to an SEC approval, companies and corps should no longer be forced to report on a quarterly basis, but rather to report on a 6-month or longer basis. He cited how Chinese companies are not reporting every 5 minutes. They don't report for 50 or 100 years or something crap like that. So you're all heading for Chinese markets. Kay, what do you make of that? I mean, that's going to have stockies up in arms and not getting their figures every quarter.
I don't know. I mean, I don't know what to think about it, to be honest. People say like that's going to reduce accountability, but I really don't know why that would be the case. I don't know why. I mean, it comes in the mix of all this Cook and then this his TikTok deal coming up with China that he uses now to get closer to Xi again. I wouldn't know what to think about it, mate. Really, I don't.
No, I don't know either. We'll wait and see if and when it happens. Yeah, as Kay just mentioned, we've had Trump meeting with the EU, China, UK, and the grand sum of things is that they managing to cobble together a TikTok deal. Of all the things they have to talk about and could possibly do, TikTok has been the top of the list. I'll just shake my head at that, but anyway, that's where they're at. Treasury Secretary Bessent says US will not impose tariffs on Chinese goods for purchasing Russian oil unless European countries do the same. Says he's willing to consider stronger Russia sanctions, including oil on majors and the use or the greater use of frozen Russian assets. Says European countries need to do their share to halt the flow of Russian oil revenue. So a bit of a punt into Europe's lap. EU officials, they've had 18 goes at trying to mug Russia off. Their 19th go, their 19th sanction package is now off the agenda ahead of Wednesday's meeting of all the EU ambassadors in Brussels, obviously coming from that talks yesterday with the US and China. And they also say there's no new date for discussions set. Russia, in the meantime, has warned Europe that they will go after any state which takes our assets. Kay, I mean, I've been thinking about this. If you're holding all that Russian stuff, and if you want to squeeze Russia, you should, then surely the one thing you put out is say, right, you need to do this by this date, sort out, stop fighting or whatever by this date, or we're going to start spending your money. But they've had that threat in the pocket and not done anything with it.
No, true. And they're still not out of which assets that they've frozen that they may use for one and all, although they said some parts of it would be used for Ukraine reconstruction. But and let's face it, a couple of boats here and there is probably not going to change much into the for the Russian oligarchs. Yeah, I don't know. I think together, the problem is that from the U.S. administration, there's been a lot of doubt thrown into the mix, whether they would support, and then against NATO, and then this and that. And I think Europe is a bit is in between two seats there. And but yeah, I mean, in theory, they would all work together, and they could just put a deadline on stuff, and if not. We cut you off completely from everything. You don't have to retaliate in war terms, I would say, because that would really open a completely different Pandora box. But just yeah, cut them off from everything. And the issue is that China is behind there, and other parts of Asia and South Africa, etc. So yeah. The answer is there, but politically they don't seem to want to press the button.
No, as the song goes, the answer is there and blown in the wind.
Yeah, exactly. And the wind is very strong, it seems. It's getting blown away.
Yeah, exactly. Well, we'll have to see. Maybe Mr. Trump wants to do something about that. Just give me a moment. I'm trying to get some of my cable off at 45. So I'll just take 44s. I'm not going to be a dick for a pip. Close on my longs there. So please excuse me for that. Keep an eye on that as we're breaking higher again. Right, moving on. Kate, any other headlines?
No. Just an interesting article about the European, the Swiss hedge fund overnight repeating what the S&B actually represents. They have now released their holdings, and we've seen that they have more than $42 billion equivalent invested in Apple, Microsoft, Amazon, Nvidia, and Meta. So we've got to know S&B is not public or government money. It's owned by the cantons and even with some private money. But as the article says, the only thing they steer away from are financials. So they don't buy bank stocks because they don't want to be seen to give like privileges to the one or the other. That would be a conflict of interest. But Yeah, they are very big stock exchange holders. They also have like 2 billion in Warren Buffett's little toy over there.
Yeah,
I just found it funny and interesting what they were doing. The other thing though, which is interesting, and that is in the context of when they intervene. And there were a few lines that I read about the actually what they do when they intervene is kind of a, um, a foreign, not local QE, because they can't use, as I said, they are not owned by the government. They can't use public funds to issue or to buy to print Swiss franc and then buy those bonds, etc. But because also one, the market is too small, and two, they are not like officially government owned, right? So
yeah,
that is actually part behind why they actually intervene in FX at times. It's a form of foreign-based quantitative easing, which I found was quite interesting in that article to have it look at it from that side of things, which is interesting because usually we just look at what they have in foreign exchange reserves and whether they are piling into FX or not, just to know whether the Swiss franc has a chance to weaken or not. But looking at it that way, it's very interesting because it also tells us about the mechanics, what they can and what they cannot do domestically.
yeah, yeah. And for those that don't know, Switzerland, the regions, the cantons are pretty much shareholders in
Yeah,
everything.
they are. They are the main shareholders of the SMB.
Yeah, so it's a weird situation. States are shareholders of the bank and happy to take profit and want the S&P to make profits, which is a bit different to other central banks who may just make profits by default in terms of monetary policy. They've got an incentive to make profits. The SMB, hence why they're so active traders. AK.
Yeah, absolutely. Right. Schlegel is less interventionist than Jordan may have been. In Jordan times, it would have been with Jordan. It was at times, let's say, a bit funnier and a bit more aggressive and volatile. Schlegel is not that interventionist as Jordan may have been. But yeah, okay, it's still something which is interesting at times.
Yeah, I still say he's not yet interventionist. We'll wait and see how that develops over the months ahead. Right, let's have a look at what's coming up today in the US because we've got some big data coming up for both the Fed and the Bank of Canada. We've got retail sales. That's going to be a pretty big one for the US coming into obviously during the summer period there. So, you know, you haven't been able to bet against the US consumer for quite some time. Is this the time they're going to wobble, or are they going to stay steady? So this will be some last minute, or will cause some last minute rate pricing, shall we say, around the margins. It's not going to wholesale change thoughts for the Fed unless it's an absolute massive variation one way or another. Canada has CPI data coming up. CPI expected to go higher on the headline, 2% from 1.7, though all the rest are looking to stay unchanged. Their core common measure coming down to 2.5 from 2.6. No expectation for the Bank of Canada core. That was at 2.6% last. It's been there. I think if it comes in the same, that will be fourth month on the trot. It's at that level. So thereabouts. Again, we're probably looking at whether we get a big variation for the Canada data in terms of what the market might do for last minute rate trading on that. You expecting anything big in moves terms from this data?
Pop, 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 pop. Yeah, I mean, Canadian dollar is probably interesting because it's gone a bit further than what we thought and what I thought at least to the downside. Yeah, all the dollars are offered, but Canada between brackets, of course, was not supposed to strengthen that much. It's still weaker on the cross side, especially the euro, Canada. But yeah, it went a bit further. I thought like 137.90 or so would have been a half decent level to have a look at, but we just dropped through it. So this makes this afternoon's data pretty interesting. On the retail sales, I mean, we expected to turn around 0.4. I mean, I think it's BOA who said that they're expecting a better number. I think on the retail, on the control group, they were expecting 0.8 or so. But then you're still turning around 1%. You're not turning around 2, 3, 4, 5%. You know,
Yeah.
are we really going to have a big trading opportunity on the back of the retail sales? I have my doubts. We're already very
Yeah.
much looking forward to the FOMC. Now that Miran has been Miran or Myron, I don't even know how you pronounce that. Miran, let's do it. Say, is going to be part of the FOMC, so that's probably what's also driving the dollar down this morning. So yeah, unless we get like, all right, print a negative retail sales, then it's probably going to add a bit of fuel to what we are seeing today to the dollar sales. Excuse me. But for the rest, are we really? It should be an important data point because the consumer is going to be important and is still very important, because if your consumer does well or bad, that's something that raises the FOMC's antennas potentially. So it should be important, but with numbers turning around 0.5%, is it really going to move a lot?
Yeah, I think if you'd be looking for a big one, you know, if it's a big -2% or something like that in the mood the market's in at the moment, then you're gonna see a reaction. Even if it's a good positive one, even if it's a +2%, I think still we're in the form where the market will hit that rally in the dollar anyway.
So that's wishful thinking, because look at the prior months. I see your screen down to April. The variations have been like 0.4, 0.5, -0.2. I mean, you got to go back to March to have like 1%. I mean,
exactly.
it would be a shocker if we get anything of the nature of 2% variation somewhere. I mean, never say never, obviously, but yeah, that would be a bit of a reaction. And I would actually argue that if looking at how the mood is in the market right now, I think some may actually be hoping for a slightly better number to sell dollars on a rally.
Yeah, exactly. Yeah, I definitely think it'll be a rally sell. You know, yeah, those numbers are what they are, but who knew we'd be in this situation 2 months ago with the jobs data? So it can all change pretty quickly, as we well know. So yeah, keep an eye on that one. Again, Canadian inflation, it's going to take a big variation to get the market changing. I mean, if CPI goes to 2.3, something like that, and the core goes up to 3%, I think that's going to make Wednesday's decision at the BOC a bit of a tougher choice, and could potentially see them staying on hold. I would definitely think those chances would be higher if that was the case. So yeah, data is still important. We need to keep an eye on it as well. Right, let's look. What else have we got coming up? I better check that as well, so I know what I'm doing. We got industrial production from the US after, which probably won't have much saying things this close to the Fed, but just keep an eye on that. Anyway, right, I'm going to stick to dollar CAD because it is interesting. This was actually, this came out this morning. We recorded it yesterday. My play of the day for the trade-off, you know, we were sitting up above 138s, and I was thinking it might be a bit of a stretch because I'm looking for a dip to buy in this one over the FOMC. I thought it might be a stretch to get down to 137, 20, 35, but we might be there today. So yeah, this trade might have to go on the back burner for a little bit while we watch the price action. Technically, there's some decent levels here. We've got a bit of confluence in the moving averages, both the 55 and 100 DMAs coming in right around that 137, 50, 60 area, marking the low so far today. And that's just ahead of this zone. But we are in one of these moments where, you know, this technical picture looks very, very good. If you didn't have the CPI data from Canada, retails from the US, BOC tomorrow, Fed tomorrow, so lots of event risk. And when we get weeks like this, I am less inclined to trust the techs. because of that risk, because we could go absolutely anywhere. So it's a good looking technical picture. Whether it's good enough for me to trade it remains to be seen. This might be one that I'll look at after the Fed and I know what's coming and what's what. We do have a break up in both cable and euro dollar. I'll look at cable quickly. A big level approaching as well. Let's go on me big chart time. Because this level, we've had plenty of action going back and back and back and back, 136.70s, but it starts around 136.50s. If you come in a bit tighter, you can see we've got some low or some highs just below that big level, but it's another one of these. Price tends to do something at levels when we get there. We did have a move there earlier this year, June and July, a move above it for a couple of weeks, couldn't stay above it. Once we came below, we went all the way down to the 131s. Okay, so that's what happens when you get these big levels. Sometimes if they fail, you get a big reaction against it. The difference with this picture, though, is that pullback. Oh, I've lost my charts. I'm on the right one. Where am I? No, I was on the right one. So that pullback that we got off that prior high stopped at the 38.2 of the 2025 trend. So in this context, that was a very strong signal, bullish signal, because we tried to break the trend, we held the trend, and now we're coming back up here, even though it's a month and a half or whatever later. So this is looking very good. If it technically, again, if it breaks here, it should go for a run at least towards that high, and then what it does on that high will be important. Conversely, if the market's got its fill in selling dollars and the Fed doesn't give anything else, it could mark again another significant top up here around this area. So it is very important, this 36, 50, 60, 70 area. Look at that as where we finish in the week. If we're finishing the week below it, it might form a strong top. If we're finishing the week above it, then we could be off to the races. And that comes into something that our mate Mark, very nutty, wants to talk about. Again, blow off tops and how to, define tops and whatever. Mark, I'm not going to talk about blow off tops or situations like that because we've spoken about that before. You should know by now both our thoughts on how you look for tops. Here is a perfect situation of how you look for tops. You look for levels that keep holding and keep holding and keep holding. Okay. And if you're in a market that's moving and you don't have price history to look back on, you have to wait and you have to draw your lines and do your homework and do your chart work. Let's go into this one. I haven't updated this for ages. And you have to just wait to see what the price action is going to do. Here we are. We keep going new highs, new highs, new highs. Unless you're using extensions and stuff like that, which I don't, you just need to wait. You need to wait and see what happens. We could have had a potential top forming here where we hit it again and again and again, but then we broke it, then we held it. This is not ready to top out. What you want to see is some really strong price action, a bit like this. A high, hold the high, dip back, hold the high. That's what you want to see. And you let the picture build itself up. Okay, is the S&P ready to top out? Could it blow off over the Fed and then reverse all the way down? Absolutely, but you can't call it until the price action tells you, or until it starts breaking down some of these short-term points that it previously held resistance at and then broke. So if this is breaking down, if this is going to top, then getting below somewhere like this 66 level and then holding it again, doing something like this, that will give you, it's a bit wobbly, but that will give you an indication that something has topped out because it's had a high and then we're back below an area of form of resistance and now it's holding that resistance again. But you've got to do the work, mate. You've got to put it in. You've got to watch the price action, stick your levels up and see how they react. You don't have to catch every single point, okay? You just have to know a level that is your risk point. So it doesn't matter if you don't sell right against this level if the price comes back up, back under. Okay, you know that if you're anywhere in that sort of zone, you can have a little sell, because if we're breaking back above here, then you're going to be wrong. You don't have to be 100 pips above here to know you're wrong. So you don't have to catch it on the nut, but just know what the price is doing. It tells you about tops and stuff. Same with bottoms as well. You know, talking about in dollar mex, the bottoming down there, 1850 that we saw for nigh on 3 months. That's just the same thing in reverse. Dollar CAD did the same thing. We were looking at that picture for days and weeks in terms of what it was doing down there. Had it finished going down? Was it going to continue going down? You know, all through this, we bottomed. Was that a bottom? Who knows? We bounced, we came back, we couldn't take that bottom out. There's signal number 2 that something's happening. Then you got another move, signal number 3 that we've bottomed out because we can't break that low, we couldn't break that low. Okay, did I trade that one? No. Did I trade that one? No. Did I trade that one? Yes. So you've got, it doesn't matter if it takes 3 weeks to sort out. You've got the price evidence telling you what's happening down here, giving you the indication of whether something's top or bottom. And the same thing can happen on the top side as well. Same thing's happened here. 136, 60, 70 was my level. We had a little pinch above, couldn't break it. Then we had a break. Could it hold it? Could it hold it? No. Come back under, it holds it. So what do? That's when you short it. Then you get that. Then it hits your support. That's when you buy it. It looks easy when you look at it after it's all happened, but you will know I was trading this as it was happening. Okay, that's how you put it together. Okay, your thoughts, mate?
Well, first of all, blow of tops, we never know when they are going to happen, nor how long they will last, nor what's going to take it to turn it around. In the technical sense of the word, I never ever traded blow of tops because, as I said, I mean, you can't know when it's going to happen or so.
Do you want to take it?
And Mark,
you can do a bit
sorry?
of drawing if you want. Do you want to take the screen and you can do a bit of
Well,
drawing if you want?
yeah, Mark was especially asking in our room about the S&P and whether it could be it could be one, or whether we are going to get close to one. This is, I would argue I would argue, because we're talking, even if it's only like since start of September, this doesn't look like a blow off top to me, because it resembles a lot like this move. It doesn't seem to me like this is a blow off top. A blow off top would be something that goes up to I don't know, 6,800 in one go, and then like this. This could become a blow off top, but it's not even a guarantee, because you could do something like a very, very wild move. And let me just take that thing away. You could do a very wild move up to 6,800 and then come back to 6,600 and then start, the whole thing again. I mean, is that a blow off top then here? I would argue no. Top forming here, I really don't see where we should have where it's showing anything top forming. If you think, and I'm looking at what you put in the room, that we could be coming close. You probably think that we just could be coming close to a top, and you say that, okay, this has gone far enough, but then you need evidence. You need evidence in the fundamentals, or valuations not stretched but way above where they should be. But be careful when you think of that. Be careful how you express valuations, because we can't forget that since the global financial crisis, then you add the pandemic on top, we're talking about there is masses more money in flowing around in financial markets. Okay, so you have to be very careful when you say like valuations these days, and also where could this end, because people in this whole move would have made a lot of money, and they auto-fitted again, unless we start to get back. First signal would be probably below 6,500, but for as long as we are not below 6,500, can we even start to talk about a top? And then as well, you go below 6,500. We've had these things here also, those little spikes under that under my red line, and they still got bought afterwards because we didn't have prior highs, breaks, etc. So for as long as you don't start to go below 6,500, the ideal would be to call a top that you go below 6,500, you get back up there and you hit your head again, and then you can start to call for a top may have been in place, and then people will start to talk about head and shoulders, etc. But here, I mean, calling a top is just a bet, right? And that's typical, so typical for retail traders. And we were talking about that in the room this morning as well. And I said, like, well, if you think about over positioning and everybody wants to be long, nobody wants to be short, so now is the time to be short. That's retail traders' fantasy. Okay, don't don't play that. Don't play that game. That is just, if you want to be short because everybody wants to be long, you're going to lose over time, over the long run. You're going to lose. And if you hit the top one day, it's just a lucky shot, trust me. So here, as you were asking about the S&P, just let it develop. Yeah, you could sell here and it's the top for the next 10 years. But who is telling us that it is the top? Nothing, absolutely nothing is telling us that it is the top right now. So yeah, whoops, I've lost it. Not the first time that it happens.
It's blown off, Kate. It's blown
Yeah,
off your
it's blown.
chart.
Oh yeah, it's blown off, Ryan. It is. Wow, it's blowing off.
And
Um,
I would have finally, Mark, forget about the term blow off top. Forget about what it means. It's nothing. How long are you going to wait for it? You've got so much to trade in the meantime that you're waiting for one event that you might catch if you're lucky. Okay, there's plenty of other stuff you can do and trade to try and form tops or whatever that will make you just as much money as trying to catch a lottery win and a blow off top or something.
And if you're waiting for, as Adam rightly said, if you're waiting for a blow off top, you're going to wait for a long time in any instrument. I mean, the last one that I really can remember is when the bottom fell out in sterling, and we were talking 2022. That's 3 years ago. So I mean, there's this. I don't trade them either. But I mean, if they come, it could be one that's been trading, because they usually come without too. In sterling, it was a different animal, of course, because it was the trust Quarteng moment. But they usually come on the back of something that all of a sudden the market goes completely crazy. But and most of the time, not not changing anything really fundamental, just accentuating what's been happening. But again, I don't look at blown off tops for as long as they haven't been confirmed or so. I mean, it's just too difficult waiting for them. Just a quick few words on what's going on, and I'm looking at the clock. We are not going to take too much time. This is interesting. What's happening in the euro dollar here? There was a bit of a wedge developing. We are above the prior high. Also, what is interesting today is that it goes paired with euro crosses being in demand, because we saw the euro antipodians are higher, euro Canada is still pushing higher, euro yen is still holding very well, and euro sterling, okay, we're still in the range, but on the back of that employment report in the UK, we could have been a bit on the defensive in euro sterling, but we don't. So it goes paired with some euro demand. Okay, so let's see what those retail sales bring. We still haven't broken above the prior high. We have to respect that, but if at any time, I'm not sure we are going to take it out before the FOMC. We will see on the retail sales. If they come out weak, yes, then this is probably going to be toast, and then the market is likely going to really start talking about this 119.15, and then the next one is 120, obviously. But Yeah, I mean, the interesting thing for the day is that it goes paired with euro demand on the crosses. So this could, and I think should, and we said it before on the retail sales, if we were to get a bit of a stronger retail sales and we get a move back down to maybe already 117.80, this prior top here, we may find some demand, especially I think in current context, if we get back down to mid 117s. I think we're going to ahead of the FOMC because after the confirmation of Miran, it's probably going to continue to weigh to a certain extent on the dollar. In the euro dollar, this could be a good one to be long of. Ali, I'm not going to talk about Euro Swiss because for as long as we are between 93 and 94, I don't even think that it's useful to look at it. Ryan already spoke about the cable. I agree, 135 and a half up to 136 and a half up to 136 three quarters. We should pay attention to it. I just took some more off as well. And the yen, then people are asking about the yen. Really, I don't think and I've been saying that so often. I don't think that the dollar yen, even though the dollar is a bit on the weak footing, we have seen also a bit of a drop when there was this Koizumi Kato duet announcement. But look at what's happening on the yen crosses. I mean, euro yen beat, okay, it's beat. You look at sterling yen, it's beat. You look at even the Aussie and the Kiwi yen, which have been are a bit lagging right now. They're still beat, but look at sterling yen. It's really pushing up as well. So I think if you want to look at strength weakness for the yen, look at what the crosses are doing, and then on the back of that, then you look at what the FOMC can give you. So I would argue if you would have like a kind of a non-dovish cut tomorrow, it may be that dollar yen get that sympathy little drop down. I don't know, down to where 640, 580. But then looking at the crosses, this may be a pair that finds support and starts to trade higher again. This is kind of how I feel for the yen right now, because let's face it, Bank of Japan is not going to do anything this month before they know who's the new leader at the S&P, right? LDP, sorry. Yeah, and so as I said, Aussie dragging its feet a little today. We're turning around this longer term trend line, also around this extension, all happening 66, 65, 70, dragging its feet a little bit compared to what's happening in the euro dollar. It's all due to euro Aussie trading a percent higher of where we traded yesterday and the day before. So they are bit positive. They're still positive. Aussie is positive for as long as we are above 66 and a quarter, 66.15, even 66. It's positive. But we need something fresh here to take it through that prior high, which is around 66, 88, 89, and then have a look into the 67s. And that is maybe we're going to have to wait until FOMC for this one to pick a direction. This is not the first time we had that. Those kind of situations in the antipodians, they can do stuff like that. Yeah, we were musing about this trend line. I'm taking it off. Yeah, gold, where I thought we would have a bit of longer consolidation. The interesting thing again that it happened during the US time, and this is now over the past, I'm even going to say 200, maybe even more, 200, 300, $400. It's Asia has been buying because we saw the increase in the PBOC holdings, but the bulk of the moves that we have seen over this last move here is the US. And it came as a little bit of a surprise, at least to me yesterday, that we did this additional 50, $60, and we're holding in Asia and even in Europe. We are adding a little bit to it, but we are above that prior high that we had. I need to zoom in. The prior high we had. Oh, where did everything go? It seems that I have lost some stuff. Anyway, we are well above this prior high here now. Again, here nothing bearish about this. Next level is going to be around 37.35. Everybody's calling now for 4,000. We could be there really quickly if we would get a dovish cut on the FOMC in turn. So we could be really quickly at 4,000. And again, as I said, now we need to look at a little bit wider levels, but again, nothing really bearish about this for as long as we don't start to go below 3,600, and I would even argue 3,500 in the more medium term. We could see those kind of corrections. We've had enough in the past, even down to 3,500, and then starting to rally would not change anything to the overall bullish picture. And silver is also pushing on. We know the long term, since we've broken above these 41.5, 41.60, hasn't looked back at all. So we could be targeting 45.40 if the Fed remains on the dovish side. And even in the short term, yesterday I was wondering whether it could hold 42. Well, it did, and we are already pushing against the next kind of extension level, 42.85. The next one is at 43.75. But again, there, nothing bearish about this for as long as we hold, well, first of all the channel, but then also 41.5. And I would even argue, even if it would get down in the long term, that is in the long term, even if it would get down back to 39.5, because there's a lot of people, I think, having missed this first move. But even if we get back down to 39.5, I would like to see what's happening there before calling really the end of the whole party. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Wonderful stuff as always. And yeah, I've got you all set up for the day ahead. You should know what's happening in prices, what to look for if you want to find them tops and bottoms. Have a great day, everybody. Watch out for that data later on, and we'll go over all that stuff tomorrow on the big Fed and BOC day. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.